You know, there are times when life just seems totally insane. Right now, the pandemic is still going. There's supposed to be a new strain out there. Society seems to be torn apart at the seams while America appears to be melting down completely, yet the stock market is setting all-time highs. But the real news has been Bitcoin lately. And in this video, we're going to try to analyze, is it too late to get into cryptocurrencies right now? Or is, because there are some people saying, oh, Bitcoin is going parabolic, it's going to crash. Well, maybe, maybe not. We're going to take a look at that here. A friend of mine recently sent me some technical analysis saying that Bitcoin should do a major pullback very soon, and then you can add to your positions or take a position, but basically to wait for the pullback. And I looked at it, and I basically sent back an email to him, and I'm sort of going to cover that email here. I'm just going to skip through it real quick, but I said he's got to be looking at a linear chart. This is a linear chart. Linear is like 1, 2, 3, 4, 5, 6, 7. Here we've got 0, 5, 10, 15, 20, 25, 30. That's linear. If this was logarithmic, it would go 0, 5, 10, 20, 40, 80, 160. It would double each time if this was a logarithmic chart. But what this does, when you look at a linear chart, you don't get true perspective of anything that is highly volatile. And when you look at a long time frame, you really have to look at a logarithmic chart instead of a linear chart like this. Notice that this looks like it's scraping along at 0 and then makes this little blip and goes back to just above 0 and then makes this big parabolic blow off top, goes almost to $20,000 and then crashes. Well, it did do this parabolic blow off top and crash, and this was a horrific crash. It looks on this chart like it's doing the same thing right now, but is it? For this email, I generated these charts in coinmarketcap.com. It's a great place to go and look at valuations, or to look at what cryptocurrencies are doing. It's just got the list of everything. You can make charts very quickly, but it only goes back to May of 2013. So here, Bitcoin started, the low in 2013 was $69 by October. It rose to $100 by November. It had risen to $200, and then before the end of November, it hit 1,130. That's a rise of 16.4 times, or 1,540% gain in just 5 months. And then it made a big crash. When it made that crash, after it hit a low of $173 in January of 2015. Now these are still linear charts. Then it went on to hit a high of $19,895. So from that $173 low, we're up to almost $20,000. That was a rise of 115 times, or 11,400% gains during that period. Then it hit a low of $3,200 in December of 2018. So you're going from almost $20,000 down to $32,000. These are horrific, frightening, anxiety-inducing pullbacks. And if you're somebody that jumps into cryptocurrencies as they're moving up and you think, well, maybe it's at a high, but maybe it's going to go further, and you jump in, these can cause some sleepless nights. And so now, since the end of that, I wrote this at the end of the year. It moved up to its current high of $29,120. However, if it had the same percentage gains this time around as it did from 2015 low to its 2017 high, then the next target would be more than $360,000, not $32,000. I don't know if the guy you're following knows something about Bitcoin or not, but he's definitely doing the wrong type of charting. And basically, anybody that says that Bitcoin has gone into that Bitcoin has gone parabolic and it's doomed, they're looking at this type of chart. It's you can barely see this 2014 rise. It had this huge rise here. Now, on the way up on this rise, I've been buying Bitcoin since 2014, since right there. And I bought all the way down to about $240 and then kept on buying a little and then turned it off, and I took this ride, my weekly accumulation. I bought every single week, turned it off, took this ride, and then I started converting some of my Bitcoin into silver and maybe a little bit of gold. I don't remember what the ratios were, but mostly silver. And I avoided this huge pullback. And since then, my silver has risen 70% from there. So here is the same chart in a logarithmic format, which measures the move in a constant percentage. So in other words, each inch on this chart is the same percentage move as the last inch or the next inch. And this puts the 2014 rise in perspective with the rise here into 2017 and today's rise. And here, when you look at it this way, this doesn't look like some parabolic blow off top. This move here isn't even as steep as this move back here, when Bitcoin was rising just over $1,000 up toward its $20,000 high. So the way that you look at charts can lie to you, and anybody making charts can skew charts to their favor. So you've always got to be suspicious whenever you're looking at a chart. You got to look at it and say, how can this chart be lying to you? Or how can the person that made this chart be lying to me? What are they? Do they have something to gain by lying to me? Another way you could measure this is, instead of looking at from the low to the high and the low to the high, you could be looking at how far does it exceed it once it breaks its previous high. How far does it exceed that? So looking at it, measuring it from here to here, or from here to here, from its previous high right here up to this high, this time around, that's 17.6 times, or a 1,660% gain. If this time around it exceeds this previous high of just under $20,000, then the next peak would be up at around $350,000. So now you have two echoes of the past that are potential echoes of the past, one with a target of 360, another one with a target of 350. So is it too late to jump into cryptocurrencies? Probably not. However, right now I haven't been adding to my positions because I've got significant positions. So it is possible that the guy you are following will turn out to be right, but based on history, the greater probability is that he will end up being wrong. Now, there's one other little fact I want you to see here. This is an excerpt from a book that I've been writing that has been cut from the book. But here is a list of some of the biggest bull markets in recent history. Number one, Bitcoin, and I wrote this back in 2017. And the winner is Bitcoin. The absolute biggest, most spectacular bull market in all of history is Bitcoin. First released in 2008, it was a curiosity known only to a few geeks and engineers called cypherpunks. It didn't even have a price until 2010, when two Papa John's pizzas were worth about $15 each, so $30 worth of pizza, were purchased for 10,000 Bitcoins. That transaction established a price, 10,000 Bitcoins. By the way, Max Kaiser just did a video in which he said that measured in Bitcoin, all fiat currencies are in hyperinflations. And it's true. It's all a matter of perspective and how you look at things. And right now, these two pizzas that were purchased in 2010, this 10,000 Bitcoins, that's $360 million in today's Bitcoin price that was paid for those two pizzas, $360 million. That is what happens in a hyperinflation. It's exactly what happens. That transaction established a price of $0.003 or 0.3 of a penny per Bitcoin. On December 17th, 2017, it hit $20,000, total gain of more than 600 million%. Nothing in history can compare. Well, today, that 600 million is now 1.2 billion% since Bitcoin first had a price. Now I'm going to move on into some more recent history and some analysis of where this could go, and just sort of a general overview of Bitcoin and the crypto sector. Back in 2015, it's actually May 10th of 2015, I did a series of interviews. Peter Schiff had flown to California, and since he was in Los Angeles, I decided to get together with him, and we filmed a series that was put into, I believe, a 5-part series of Peter and I discussing things. There was actually a 6th part that was never released, and that was about Bitcoin and cryptocurrencies. We saw eye to eye on everything except Bitcoin and cryptocurrencies. And every single question that I asked prompted a response from Peter that said, but what if it goes to zero? That was the only answer. But what if it goes to zero? Okay, well, guess what? May 10th so we're talking about $240 is where the price was. Today, it's over $36,000, a rise of over 150 times. But getting back to that video, just a side note here, you can see here that my arm is very, very swollen. I had a horrible bicycling accident that morning, and I had spent 4 hours in the emergency room. During these videos, I was on morphine. I'm bleeding, and you'll notice if you watch these videos that I can't lift this arm off of the table. I had severed my rotator cuff completely. I was in some horrible pain during this thing and on morphine, but got through those videos. And then that last video, but what if it goes to zero? But what if it goes to zero? We're going to explore here. Can Bitcoin go to zero? Well, I just want to remind you, don't look at linear charts. Look at logarithmic charts. I also want to remind you, I started buying here and I told all of my insiders that I was putting a percentage of my portfolio into Bitcoin. Also, back in 2013, I went to an event up in Fremont, California to see Elon Musk speak. Drove my 2012 Tesla Model S, the 599th Model S off of the line, up to Fremont, California. And I met a man named Tony Galippi there. And Tony established a company called BitPay. And after meeting him, I became the first major precious metals dealer to accept Bitcoin. So we are the crypto-friendly precious metals dealer. And I use our own system to convert my cryptocurrency into gold as I'm taking profits out of cryptocurrency, and it causes me to sleep a whole lot better at night. But I continued buying all the way down to when, I interviewed Peter back in May of 2015, and so I was still buying every single week, and then turned it off, took this free ride, converted some of it into precious metals right at the ramp up of this blow off top, and since then the precious metals have risen also. And so I will be converting some more sometime, but we're not there yet. And a logarithmic chart shows that this is not a parabolic blow-off top. So when people say that, don't believe it. So one of the things that you can use for a prediction tool here, this may or may not turn out to prove accurate, but looking back at the past, it's proven to be a pretty good model, and that is the stock-to-flow ratio. And so this site is wonderful, Digitalk. And they've got all of these different types of tools here, and you should go there and take a look at it. It's great. But here it starts back in 2010. It's showing a price of 1 cent. And, we know that it actually started at a third of a cent. But what you're seeing here, this purple line is the stock-to-flow ratio with it's the 10-day moving average. If you don't do some sort of moving average, there's going to be huge noise here. It'll bounce up and down. So you average it, and what you can see here is there's something called a halving. Bitcoin started where every time to make the Bitcoin network run, all of these miners have to run millions of computers that are trying to guess a very large number. And they do this trillions of times per second. So you've got millions of computers guessing trillions of times per second. It still takes 10 minutes for one of them to win, and then it gets to the block that it has created gets accepted as the block that's going to update all the ledgers in all of the computers that are running the Bitcoin ledger all around the world. And then every 4 years, the number of Bitcoins that a computer wins is halved. And so this is a halving. So the stock, the amount of Bitcoins that are in existence compared to how many are coming into existence every 10 minutes is what we've got here. And when it halves, this ratio rises because there are fewer coming into existence. And then the ratio goes along, and then it halves again, and then it just halved again earlier this year. And what you see here is that, he's got a 463-day moving average. I don't know why it's 463, but it tends to follow the price. The price is the brightly colored line here. And this is the number of days from the halving. So you start out with 1,400 days, and then you get down, it gets closer and closer to the halving, it's turning blue, and then it turns to bright red again. So you can see it turned bright red here and here, and then it catches up with the stock to flow ratio, and it surpasses it. It didn't surpass it by a huge amount last time, but look at how far it surpassed it the previous times. Now I'm going to go to a chart that's a little bit easier to look at. This model uses a 365-day moving average. So each point along this line is the average of the previous year. Each day, you add up all of those days over the previous year, you average them, and you plot that dot. And so here you can see that this model has been very good at predicting where the price is going. And you can also see that the last peak did on this model surpass the stock to flow on that. And it's predicting a price up here of over $100,000. And to me, it does not look like Bitcoin is going into any parabolic blow-off top right now. There could be a little consolidation, but I don't think it's like going to crash. Now, Peter Schiff was always saying, but what if it goes to zero? And there is that possibility, and I'll show you that in a minute. One of the things that you can also use to see whether Bitcoin is already done with its performance or not is